The global economy is set to rack up a sorry record by the end of 2024, the slowest half-decade of GDP growth in 30 years. This is according to the World Bank's latest Global Economic Prospects report. By one measure, the global economy is in a better place than it was a year ago. The risk of a global recession has receded, largely because of the strength of the US economy. But the report noted that mounting geopolitical tensions could create fresh near-term hazard for the world economy. Meanwhile, the medium-term outlook has darkened for many developing economies amid slowing growth in most major economies, sluggish global trade, and the tightest financial conditions in decades. Global trade growth in 2024 is expected to be only half the average in the decade before the pandemic. Borrowing costs for developing economies, especially those with poor credit ratings, are likely to remain steep, with global interest rates stuck at 4 decades highs in inflation-adjusted terms. Developing economies are projected to grow just 3.9%, more than 1 percentage point below the average of the previous decade. After a disappointing performance last year, low-income countries should grow 5.5%, weaker than previously expected. By the end of 2024, people in about 1 out of every 4 developing countries and about 40% of low-income countries will still be poorer than they were on the eve of the COVID pandemic in 2019. The Central Bank of Nigeria (CBN) says it has recently disbursed approximately $61.64 million to foreign airlines through various banks in fulfillment of its commitment to eliminate the backlog of pending matured foreign exchange in deposit money banks, DMBS. The initiative, the CBN says, is part of efforts to decrease its remaining liability to the airlines. Acting Director of Corporate Communications Department at the Apex Bank, Mrs. Hakama Sidi Ali, who made this known, further disclosed that in the past 3 months, the CBN redeemed outstanding forward liabilities amounting to almost $2 billion. This, she added, underscores the bank's commitment to the resolution of pending obligations and a functional foreign exchange market. The International Air Transport Association had reported in December 2023 that Nigeria holds the highest trapped funds belonging to the airlines at $792 million. Foreign airlines have been selling tickets to Nigerians in dollars to repatriate their funds in hard currency, while some, like Emirates, have ceased flying the Nigerian route. The Debt Management Office (DMO) offered for subscription 2 Federal Government of Nigeria savings bonds in its inaugural offer for 2024. The bonds listed early this week include savings bond with a 2-year maturity date of January 17, 2026 at 11.033% annual yield, and a 3-year savings bond with an interest rate of 12.033% annually, which is scheduled to mature on January 17, 2027. Both offers close today. Settlement takes place on January 17th, and the coupon payout dates are April 17th, July 17th, October 17th, and January 17th. The Nigerian Communications Commission (NCC) has made known its intention to bar Globacom customers from making calls to MTN lines soon over alleged non-settlement of interconnect charges. The NCC, in a public notice signed by its Director, Public Affairs Department Ruben Moka, stated that it granted partial approval for the disconnection of Globacom from MTN Nigerian Communication PLC in accordance with the Section 100 of the Nigerian Communications Act 2003 and Paragraph 9 of the Guidelines on Procedure for Granting Approval to Disconnect Telecommunications Operator 2012. The NCC revealed that at the expiration of 10 days from the date of this notice, subscribers of Globacom will no longer be able to make calls to MTN, but will be able to receive calls. This is not the first time Glo subscribers will be disconnected from making calls to MTN over the same issue, as records show same scenario played out in 2018 and 2019. The Nigerian Electricity Regulatory Commission (NERC) has dissolved the board of directors for Kaduna Electricity Distribution Company (KAEDC) over its inability to clear outstanding 110 billion naira owed to the Nigerian electricity supply industry (NESI). NERC, in an order signed by its chairman and vice chairman Sabusi Garba and Musiliu Oseni, said It was due to the receivership of the company not being able to get a new buyer of the company on time. The order stated that the company was owing 110 billion naira to the Nigerian Bulk Electricity Trade (NBET) and TCN's market operator (MO) from 2015 October 1st, 2023. KAEDC, the order observed, is experiencing severe liquidity challenges and its commercial viability and continuation as the market participant is in doubt. NERC in the notice announced the appointment of Dr. Umar Abubakar Hashidu as the new administrator of KAEDC until sale to the new investors is finalized. The Nigeria Sovereign Investment Authority (NSIA) and All On, a Nigerian impact investor focused on renewable energy, have synergized to bring light and opportunity to energy-deprived communities across the country. Both parties said they will achieve this by deploying distributed renewable energy (DRE), a transformative approach that utilizes small-scale solutions like solar mini-grids and home systems to reach areas abandoned by the traditional grid infrastructure. Caroline Ebombo, MD All On, noted that DRE offers agility and efficiency, capable of illuminating remote villages and towns overlooked for far too long. On his part, Aminu Umar Sadiq, NSIA's MD CEO, called for continued investment for development partners along with the provision of both capital and technical assistance. He also challenged the private sector to innovate and develop scalable, affordable DRE solutions. DRE is central to NSI's renewable investment platform for limitless energy, which wants to achieve expanded energy access to the unserved and underserved segments of the population.